last 2 weeks, but right now Q4 is here. We have 3 months ahead of us. Fresh month, fresh start. Let's of course focus, keep showing up, keep following the plan, and always remember to think long term, because you can have a losing day, you can have a losing week, you can have a losing month. But then, of course, with only 1 month, with only a couple of trades, everything can change. So keep showing up, right? So without further ado, I'm actually gonna go straight into the video. There are not gonna be any transitions. I'm just gonna go on the market and analyze as I do, but there are not gonna be any timestamps. So again, because the market is running, we're just gonna go straight into trading right now. And I'm going to be making a better, even monthly edition on this Saturday. So stay tuned for that. Let's roll the intro and get started. Pulling back, well, usually when it takes some sort of a liquidity, and that wasn't a liquidity, this right there wasn't a liquidity, the market just keeps breaking above them. So of course the next one is this one, so we can potentially long until we get there. Now, dropping onto the daily time frame, so you can see here on Thursday and Friday we did have a little bit of a pullback, which is pretty good, because that kind of gave us a 50% pullback within the overall daily range. So at that time, the daily low was this, the daily high was that. The market did pull back and it filled that imbalance that was exactly around the 50%. And right now we make a brand new daily break of structure. So I'm just gonna mark it like that. Again, guys, I'm just gonna be a little bit faster in this one, not to lose your time, and also to show up in the markets because they're already running. That is currently our daily range from this low to this high. Very impulsive move yesterday. So again, the market opens and it just decided to massively push up. So currently in terms of higher lows and higher highs, the daily range is exactly the same as the hourly range. So that is the low, that is the high. It is exactly the same on the daily and on the forex. Like there is no hourly pullback, like something like this, for example, to actually have like this to be the hourly higher low, but this to be the daily higher low. No, they're both the same. Where are we currently? Where we're at a higher high. What do we expect currently? We expect a potential pullback. Where? Potentially 50% an imbalance, okay? Which we do have. We took out this high, we took out this low. We're already introducing a nice bearish pressure. Then of course we can try to take shorts. So if I am trading this right now, I would personally look for a retest right there and then potentially start shorting. Of course, be mindful of your targets, like look to take, of course, a the Asian low, look to take like targets below lows like that to the left, because one single low like this can provide enough liquidity to reverse the market into the highs. Okay, so when you're trading counter trend right now, keeping in mind that the US dollar is extremely strong, right? Don't go very big on shorts, okay? Until we clearly start seeing that the market is actually bearish, which is currently bullish, okay? So that's the DXY. I mean, previous daily high has been taken, liquidity has been taken. Can this high be taken as well? Like, yeah, it could come in, wick it out, and then reverse. Currently, like the majority of my stop losses are wick out, either by spread or by like a little wick, and then it just fully reverses in the opposite direction. So I am kind of reflecting right now that I need to keep a bigger stop loss. So again, kind of trying to figure out how to battle with this, but currently that is the range on the Dixie. Let me try to keep it nice, simple, and straightforward. Now, look at the weekly candle already on EU. So it's already the size of the previous weekly candle. So the previous weekly candle is 160 pips. This weekly candle is already 130 pips. So this guy is expanding like crazy. Took out that liquidity low. So, oh, my analysis still remains from last week. I haven't even removed it. Let's see if it played out. Well, no, yeah, I was looking for a big pullback. The market dumped, took out the liquidity. Then what happens after liquidity is taken? We had a pullback. We come in, took out the high. And then after we took out the high, we immediately went down and took out the low. So let me remove everything. And yeah, dropping onto the daily time frame. So the most important part right now is that we have a daily break. There it is. So we respectively have a daily supply and a new daily range. And I pretty much draw it like this. Okay, so that is our daily high. But you can see actually right here, we do have that little zone that is actually a valid hourly high. Okay, but in terms of where the market currently is, it's at a very big lower low. It took liquidity. There is like breaking this low to the left as well. Like the next target is gonna down, wick down, wick down. There is no strength, although there is rejection happening from the downside. So the market could already start running. I don't like it very much, but again, similar to the Dixie, we do have a trend change. We did take out the Asian low. So if we pull back and if we give a setup from here, I would definitely be entertaining the idea of taking a long. And of course, if the market starts forming new valid ranges to the upside, then of course keep following the longs until you're wrong. And why do I shout longs right now? Well, because I do expect this sort of a pullback, but a big but, the market can just decide right now to dump and continue trading to the downside. Being in this very massive bearish trend right now with an extremely bullish dollar and with extremely bearish euro, right? So the US economy is doing much better than Europe, right? This is why we're seeing the pound and the euro USD just plummeting to the downside. So don't go very big on longs. Don't go very big on counter trends because you're going to lose money. It's going to be much better for us to just wait for some sort of a pullback right now. And the moment we see a bearish alignment, right, then just go short. Because again, shorts are going to be the high probability setup. So those are potentially my scenarios on the euro. Right now, it looks like it's going to pump up a little bit to the upside, taking out Asian high, hopefully push us up a little bit further, and then for us to start taking shorts. So let's see if we're going to have a pullback day. Euro yen. So that is my old analysis. So yeah, euro yen, it looks like it didn't exit this consolidation the whole week, but it actually come in and took out this liquidity that I indicated. And after taking this liquidity, then it started rushing to the opposite liquidity. So this analysis kind of remains the same. No, this is, so that one was the swept one. So if I just quickly go to the weekly time frame, yeah, I mean the JPYs are usually like just look at this. So I'm pretty much gonna say that I'm not gonna be looking to trade this. The daily time frame is still the same as well. So that is our daily lower high, daily supply, tapped in, again it tapped in. Or right now it does look like it wants to make a daily structure break, which is most likely where we're headed right now. So yeah, dropping onto the 50-minute time frame. Like yesterday was a good idea because again we have been indicating this liquidity for 2 weeks now, I guess. Like last week it just ranged inside this range, but right now yesterday we came in, we took out that liquidity, and then we immediately aligned bearish from here. And then again, can you catch any shorts on the way down? Well, that is your job, right? But daily was bearish, took out that weak high as liquidity, and then it just massively reversed. Right now, EJ is very tricky because it's very close to that liquidity low. Took out the Asian low. Then it came in, took it out again, actually causing a 50-minute break of structure. So I really don't like trading it that low. So currently, I mean, it's shorts and that is your zone. But I mean, look at how the break happened. So this market can either continue lower, take the liquidity, and then start retracing up, or it can, like right now, TC up, maybe give a little bit of a pullback similar to EU, and then go down. But what I'm just gonna say is you have a much better chance to trade EU right now rather than EJ. Because EJ is sticking a very big range, and of course, yeah, you can trade it from the low all the way to the high, and then from the high all the way to the low. But right now, it's in a very tricky situation because it's very close to taking out that hourly and daily low, right? But it's also a little bit extended, and we can expect a pullback. So again, guys, flow with the 50-minute time frame or the 30-minute or the hourly, whatever is your middle time frame, and then just of course listen to it. Currently, it just wicked this low, so it's shorts. That is the zone. If the zone breaks, you can go long, expecting that pullback. But if it continues to go down, taking out this liquidity low, then of course you have to adapt because you're gonna have a new hourly break, and then of course your range is gonna look something like this. And then after this low is taken, then I would say it's definitely a much better chance to look for that pullback and to look for that imbalance to fill. Okay, so that is gonna be my outlook on Euro Yen. Let's have a look at the Aussies. I still keep my analysis from last week. So we had a hourly break. That was the current range. The market went down, then it massively went up, and then it massively went down. Okay, crazy. So let's delete everything. Just go back to the weekly quickly. Yeah, last week was just a very big mess, and right now we're starting to massively initiate to the downside. Well, that is because Bank of Australia, they kept the rates the same, right? And of course, that is bearish. That is bearish. So there is our daily break, new daily break of structure, new daily supply. It's gonna be forming a new daily imbalance as well. Maybe when today's candle closes, the hourly break because we pushed up, then we broke down, and there is no hourly lower high apart from this high. So currently, from the high to the low, that's our range. There we found that daily imbalance. There is the 50% as well. So I mean, yeah, currently, yeah, look at the market, massively dumped lower. So it's very scary, and I mean it's very low probability, but you had that breakdown, then you had that trend change to the upside. You had this demand zone, so technically that could be the lower low on the FOH. So you could look for something like this, enter with a confidence on the lower time frames, and then you decide. You can target Asian high, you can target the open of the imbalance, you can target 50% of the imbalance, or even the 50%. How do we know where it's gonna pull back? We don't. So this is why when you're trading counter trend, you use fixed risk to rewards. So like if I take a trade right there and I have like a 3R, so let's just say I take a trade from here, stop loss below, and then I'm just gonna exit at 3R. Like that is not even the Asian hype. So just exit at 3R, take your profits, because anytime the market can decide to reverse and flush. Why? Well, because we are massively bearish. Again, don't forget, we massively dumped right now, and the market is very likely going to continue. So avoid going counter trend, but currently that is the only setup we have on the intraday. So let's see how it goes. AJ. Okay, AJ, finally some sort of developments. And yeah, we were bearish. The market pulled back. It tries to push down. It failed, and it came in, swept the high. And right now it's massively flushing lower. So on the weekly time frame, let's catch up on the weekly. Well, the weekly is still bullish. The weekly is still bullish, but yeah, from low to high, pulls back. Essentially, this should be the liquidity, but of course, we're gonna have to monitor the very recent sentiment of the market. But yeah, this is gonna be wrong because the daily low is here, the daily high is here, the weekly low is here, and the weekly high is here. All right, so daily is bullish. So again, whatever you mark up here, right, all of this is all internal on the daily and the weekly. So the only not internal price action we have right now is the FOH, because the FOH did have this very big range right there, but we finally broke out of it. So currently we can start playing with this very recent structure. So it had this hourly breakdown. And yeah, pretty much you can take a high like this. That is your hourly lower high. At the lower low once again, so same stuff, right? So same stuff. From high to low, the fib, there is 50%. The daily time frame formed imbalance already. Again, this is not a valid daily range, but it's a valid hourly range. And I'm just taking the imbalance on the daily just to keep it simpler and not like have 10 imbalances on the 4-hourly time frame. So again, in terms of the bias, looking for a pullback 50% imbalance fill and then continuation to the downside, because that is what the most recent price action tells us. And then of course, for intraday opportunities, we're going to have the same situation here. The market is very likely going to make a trend change to the upside, give you a little bit of a pullback, but then of course, be careful trading the pullback. Maybe take a little trade, exit fast. Okay, so there is not even a 50-minute TCO right there. So wait for a clear push, clear pullback, 1-minute confirmation or 5-minute, whatever the time frame you use is, right? So in this case, if you use like a 30-minute time frame, it's fully bearish. I recently started using the 30-minute a lot and I'm loving it. So in this case, you cannot go long because the 30-minute high is here and the 30-minute low is here, and it